Okay, good morning. Let's see where we're at here. So, seems like Friday was a bit of a stick in the eye over there. What a red day. Can you imagine a red day in this uptrend? Now, question is, can it be ignored? Does it have to be ignored? You can see the past ones were pretty much all ignored. I could say except this one pulled back a little bit. So at the beginning of a trend, let's scrunch this a little bit. At the beginning of a trend, you're highly likely to see red bars ignored. That's what's supposed to happen. That's how we use bar by bar analysis to say, is this one for real? What are the clues, the tells as to what's happening there? So the initial move, you can see the bottoming tail bar and the push up was bullish. And there are other pieces of information that support that bullish price action. Like it went sideways after the push up, it went sideways versus pulling back, and the red bars ignored. The bottoming tail bars that formed on the dips and the red bar ignored, sideways chop here. I think this is where sentiment got to an extreme up in this area here. I forget anyway. So now there was an attempt to go higher this morning. They came right back in. And now it's sitting on this support over here. And the markets are up, about 10% since the October low, 8 weeks in a row, what have you. To have a little bit of a down move, in reality, big deal, right? Now, if it turns into a rout, well, yeah, okay, this is a big deal. But at this point in time, we really don't have any information to suggest that this could turn into some ugly move to the downside into the end of the year, because our internals aren't at a bearish extreme. This isn't a climactic move to the upside. It's a pretty decent move in the course of a month, of course, up about 10%. And some kind of a resting period certainly would make sense. I don't think money managers want to start dumping stocks into the end of the year and curb their performance, but we'll see how it all goes. On a very interesting move that happened over, the course of this month, and I wrote about this in the weekend letter, was the breakout of this range here. So, in October here, we had, the dip down, and then that started the rally. And now we've got this breakout to new all-time highs. And while this doesn't, let's just say it doesn't jump out as a out-and-out breakout, the markets have spent the last 2 years going nowhere, essentially. So the markets are up 10% in a month, whereas this wide range bar that we wrote about in the letter back in the time in 2018 and say, hey, this is more of a climactic run with a wide range bar. Now is the time to be careful. And while it didn't collapse at that point, you see that the markets have really gone nowhere. So if you look at this high to this high here, the markets are up about 10% in 2 years, and here it went down quite a bit during that time and came back up. And here, okay, we're looking at a monthly chart, red bar ignore, bullish price action, so on and so forth. But what this suggests to me is that, this bull market's not over. I mean, you could have all the predictions you want based on, let's just say fundamentals, PE ratios and so on, but it's not over till it's over. Right, where you've got to get at least a breakdown on the daily time frame that violates the trend in a lower time frame. And right now, this looks bullish as hell, where it actually could become climactic to the upside. And what does climactic mean? It just means a momentum move that just doesn't pull back. And then typically you get, a wide range bar, climactic kind of move, and a wide range bar. We don't have that now. We've had 2 years of chop, and the majority of this year was chop, from the move that started at the beginning of the year that topped out right? In April, the decline back up, sideways, 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 and then the move that occurred here. So there's been a lot of choppy price action that's gone on. And could this pull back? Sure. So now we go into our factory work, right? And we say, okay, where might it pull back to? And so we don't know which line that was. Yeah, that one. There we go. Okay, what was resistance? Where's my thing? We make that support. We call that minor support, right? That was the high that it pulled back from. So that's minor support. This is major support. And now we'll see if it's going to pull back here, how far it pulls back. It should stop in this area right there. If it begins to pull back, right, that high, that would be normal, give or take, right? That's not an exact point. We don't get into fib levels and trying to define esoteric types of levels and proprietary levels. We just keep it real simple, right? Look over to the left, see what was resistance should become support. Down here is major support. And anywhere in this area, right, buyers should show up again. And so we'll see. We'll see where it all goes. Let's go back. Let's look at the spiders before we go there. ES up, pullback. Okay, today, am I missing? With ES up, pullback that far, I don't think you're missing anything, Paul. You just quoted, stated what it did, right? So it tried to break out and it came back in to this level where it's stabilizing. It's up a whole bunch of weeks in a row. And as I just mentioned, it would be normal for this to pull back to some support level. Nothing wrong with it. I mean, it's nice when things go straight up. We call it just a painless, market environment or trade where they just go up like that. But at some point it stalls. And so I don't know where this bar is going to end by the end of the day. But right now we see that the breakout was rejected and it came back in and now it's holding support. So the depth of retracement to major support is a short-term bearish event, black and white. So just looking at the daily time frame as we did on SPX, right? Minor support, major support. If it's really strong, it'll go sideways. If it's a little weak, it'll pull back to minor support. If it's weaker, right, it'll pull back to major support, and that will put the trend in question. If it trades below that pivot low, the trend is now over in this time frame. So that's the trend analysis. That's black and white. Repeat, wash, rinse, repeat. It's all the same thing. Right? So right now, we'll see if the support level holds. If it doesn't, it simply suggests that it could come down to this level. Right? So 31.29-ish would put it right in the area of minor support. And this is what makes, when you get into the swing course and MTS, I do mention that minor support is a subjective reference point. But when we look inside of these bars, we see what the reaction was on the way up. And what is actually being reacted to is this area over here. So we'll see. We'll see if it actually breaks here, if it breaks down. And then, as far as the credit spreads, if it breaks below here, selling a credit spread, if there's premium there up above these highs, should be a no-brainer. So breaking of last week's low, well, on a short-term level, of course, if it was to break last week's low, does it change the bullishness? Not from a weekly perspective and not from a monthly perspective. So last week's low was around, well, what is it there? 31, I don't have my 31, 11-ish or 15, 31. No, not really. No, it would be pulling back. It would be pulling back into this area where buyers should step up, rising 20 MA. It wouldn't change anything. I mean, corrections happen. Look, look at this. I mean, of course, I'm just stating the obvious. And at times these things look so scary when they're happening. But look, this is why we have our black and white analysis to keep our emotions in check, to keep us objective with our analysis that says, hey, this is major support. If it pulls all the way back here, that's not a good thing. It's not supposed to. It's supposed to go sideways or pull back to minor support. So this did, but it created a bottoming tail. And this is what I refer to as repairing the damage, right? So at this point down here, especially looking at this from the daily chart, we scroll back to that, we're like, that's bad news. But then bar by bar analysis, we have to update the information. So same story. If this pulls back below last week's low, that's not going to change anything. What'll change our bullishness will be if the buyers don't show up and it crashes through there, right? So still, it would damage the daily time frame if it breaks down below major support. That's a negative. Uptrend, higher highs and higher lows. We wouldn't have that anymore. We still would on the weekly and monthly time frame. So it really becomes black and white. It removes our personal biases and opinions and what we hear, the talking heads and the channels and Bollinger Bands and all that other bullshit. Excuse my language, but I do get passionate about all of that crap that everyone's inundated with. But let's keep going here because I'll be talking until 4 o'clock. Okay. Qs. Same story, right? Uptrend. And I guess I have that on auto. So we see that was the gap up, and now it's pulling back to support there where buyers are stepping up, right? It's really, look, the analysis is black and white. The trades are not so black and white or easy, meaning when we start thinking about risking our money on things, the fear and greed and all that starts coming into play. But that's why we have this analysis that guides us to say, hey, is it an uptrend in this time frame? Yes. Is it uptrend in this time frame? Yes. Is it an uptrend in this time frame? Yes. There should be buyers on pullbacks. So this gap up was rejected, and we've got a deep pullback here on this 15-minute chart, which is down to a support, which is the same thing looking at the S&Ps, right? Something negative happened here. Do we need to know what it is? Maybe. We're all interested in news or whatever. But do buyers show up and push it back up again? Or does it go sideways down here for the next 20 minutes or what have you, and then start breaking lower, which is going to guide us intraday anyway to say it's going to go lower yet, right? So same story, trading range, 60-minute chart. It tried to break out. It couldn't. It's at support. If it can't bounce up, it opens up the door to testing the next level, right? So we're starting to get, this is a new bar, right? At the beginning of the day, we're starting to get a little rounding top here. I don't know where this is going to end, but it could be a red bar pushing down toward this level. We'll see. Same story. We've seen a lot of this lately where these markets are creating similar patterns, and we're seeing the same thing. So no reason to regurgitate it. Same thing going on there. Russell holding up, right? It had that red day on Friday like everything else. It's in a trading range. These are the futures. We got a topping tail. Everything's been rejected here on the attempt to move up. But last week, the Russell broke out of this trading range, which is bullish, of course. What would change our bullishness? A breakdown under that low and close below it, because that's not what's supposed to happen. It rested for 3 weeks up there and created support, and it broke out with a wide range bar. Factory work, right? And could change this to green, but this should hold right in this area here if it begins to pull back, and ideally even higher. We'll see what happens. Oil, that was a nasty day on Friday. It was hanging up there, but came down to major support. Buyers stepping up here. We'll see what's going to happen. Is it a 1, 2, 3 down? The way it came down, I would think so, which probably isn't a good sign for the markets. It certainly isn't for the energy stocks. And so we'll see what happens. Right now, it's bouncing a little off of the support there. Bonds down here, falling pretty hard, which means interest rates are going up, which isn't such a bad thing. It's actually what's supposed to happen if the economy is so great. So money coming out of bonds here is not going into equities this morning. So a little unusual, or, bonds are dropping and equities are dropping, but, so far, really not such a big deal. And it's just kind of churning down after that move. But the depth of retracement here is too deep. So I don't know what that's going to do there. Probably goes a bit lower, I would think. Maybe not in the moment, but because it's down a whole bunch there on the hourly chart. But I think this is where buyers would want to step up again. Gold is kind of continues to be messy here. The weekly time frame is still consolidating at the bottom of the wide range bar, which is short-term bearish within the bullish uptrend and the bullish monthly. And so buyers stepped up at the low, and now it's kind of interesting. Everything is kind of weak or lower this morning. So gold came off of the low here. It's an inside day so far. Really not a big deal. I don't know. I got my alert up here to see if it can poke through that level there, which would be a short-term buy, looking for it to go up. And silver, pretty much the same thing, kind of messy. And transports, you can see we're waiting to see if they can pull off the same thing as the Russell and clear these highs over here where they've been consolidating. So we'll see. Got the alert up there. We'll see if the transports can bring up the rear. And I guess that is about it. Just peeking at Bitcoin here. It's just kind of a mess. And mid caps, and they came down kind of hard. But again, we'll see if this breakout actually fails or not. So as always, we keep an eye on all of these things and see how everything develops longer term. That breakout looks pretty bullish, black and white to me. There's nothing. This Roku got a downgrade today after this amazing run. So looks like that's in for a little bit of trouble there. Anyway, all yours, Dan.
Good morning. Hope everyone had a great weekend, Thanksgiving, all that. Yeah, I have Roku on my list. And Greg, how we've scratched our heads so many times when upgrades and downgrades come out relative to the chart. There was one upgrade today. We'll get to it in a few minutes. But at least this one, yeah, it's after a big run. And now the downgrade, the chart supports a bearish situation. Yeah, APA is our only problem child. We have an Iron Condor, the 25.5s, $3 wide, and we're short the 20s. So it's gapping, under our stop and under the short strike, way the heck down here. That's an ugly gap. And we did that based upon a range-bound 100% implied volatility trade. We took it 93 cents. So even if we were assigned the stock at 20 bucks, our cost basis is $19.07. And you know what? If you wanted to own APA at $19.07, then you do nothing and you wait till expiration, and you'll either get assigned or it'll bounce above 20 and you won't get assigned, and you make 93 bucks a share or 93 cents a share. But in any event, we're going to, I have it here in a window in the bottom right. I'll keep an eye on it. And that's our only problem in all of our many opens. I have whiskey as a climactic sell setup, bear call credit spread. I can't really tell where it's gapping here, light volume. Look at this pace C is another one. This was a reverse heading shoulder, so that we were selling a put spread down here. I now wish it was a directional, but it's getting ahead of itself. So there will be a day we're going to be shorting a bear call credit spread on you. Ideally, it would be an M top, or at least at a minimum, an M top on an hourly chart. Let's continue here. 335, bullish gap, but that looks like a penny stock toy. Another penny stock toy. ASLN, penny stock toy. I just don't trade these. Remember Peloton? Look at this bottoming pattern. We were watching it down here, Greg. I don't know why we didn't trigger it. That was your bottoming pattern. Made a new low, greater 100% retracement, higher low, bottoming tail. That was the entry right over that bar. I can't say I'd be in it today, but that would have been an amazing 5-day swing trade. Clovis 1609 gapping up. This one's getting extended. When things gap, Friday was the biggest range. If this one was gapping up to like 17 or 18 or 19 bucks, then that would be a very good gap and crap candidate. I don't know if Greg meant some bonds here today, but gapping down here. So now we have range bound. This actually could be a condor now. Selling it out of the money put spread below here. Now we got 2 reference points of resistance right there. Sell a 142, whatever, 146. I'll keep an eye on that. 1371 bullish gap, but I'm not chasing it. There's our APA we talked about. ALSN. I'd actually typed this one in error, but then I looked at it. I'm like, wow, look at the breakout, daily, weekly, monthly. So let's watch this on a pullback. If we get a buy set up here at a minor support right there, that's a beautiful long. Awesome. I like it. Oh, Splunk. I think this was one. Yeah, this got an upgrade. So look, why were you not upgrading it here at $1.25 or even on the gap up day like some people do? You're doing it now? Climactic sell setup far from the 20? I think those are stupid. SPT is an IPO coming public. Roku we talked about. Deere got a downgrade. And we were looking to sell a call spread on this gap down day, but there was no juice. It's still weak. We can keep an eye on that for a Friday call spread. Tapestry, there's a couple of retails mentioned in Barron's. This one's, it's just in a sideways coma. Because of this flagpole here on the left, I would prefer an upside breakout. Burl, I was watching on this igniting day. I'd like to get, another day or two down, maybe around the 220. That looks good, both for directional and a put spread. Whiskey, I mentioned call spread, SKT. Barron said this little guy is undervalued. So, you can pretty much expect a gap up on those, but that by no means does that imply it's going to hold. PayC we mentioned, BMY gapping up, but we have this as a call spread candidate just for Friday. Negating that green bar. T looks lower, ENTG, sell setup. XLP, ETF, nice breakout last week. Looks good. DFS, little banking stock. Now, if it can get through here, then even though the market's overbought, it should move higher. GPC, small little reverse heading shoulders here. If it can take out the green bar, then it's a red bar negated and it has a price void. Buy setup on the weekly. JP Morgan, I also like as a breakout trade, another bank. Morgan, if it can get over last week's high, then it's red bars ignored. I like all three of those. I'm still on a pullback, little steel stock. And I think I read the Trump's mad at Argentina and Venezuela, and he's instituting the because of them devaluing their currencies, so he's gonna institute the steel imports from those two countries. Box, so 1, 2, 3 from Friday I mentioned. Argentina and Brazil. Okay, not Argentina. Okay. Greg's Coffee Shop. Yeah, we missed our entry. Microsoft's extended. Uber's, it's weak pre-market. Beyond, we have a put spread on this for December. Marijuana, Michael Jackson. Hey, here's our higher low. If, and this is a big if, it holds. I have absolutely no idea if this is going to hold, but if I'm a betting man, which I am, what do you think my answer is, Alex? Yes? No, I don't think my bet is no. And here's why. Still on a downtrend, bear 180 reversal. These are not potent reversal bars. The weekly is still bearish. I think it's going to take out last week's low, and then what I would like to see, you know, either a big bottoming tail, you know, closing at the high, or retest of this prior low, or taking out the prior low and then snapping right back on volume. So this is a watch for me, but I would put money on that it's not going to hold for all those reasons I just stated. Google's a mess. Netflix holding up better than other things. No, I did not know that. Apple still is a beast. You know, was that a potential M top? Sure, but it's also a potential consolidation at resistance. So I think Amazon's going to go whichever way the broader markets do. That's my answer on that one. Still a beast, daily, weekly, monthly. Amazon, I like a call spread under Friday's low. Yeah, that's, you know, Mondays I like waiting 10 minutes instead of 5. Upper right here, Roku still weak. Wow, that's a big gap. It's excessive now. It's amazing one brokerage house can wreak havoc like that. I mean, when you think about it, I think it's such a scam. Like, there's absolutely nothing that changed fundamentally from Friday to today. Nothing. But that's what we mean that we trade people and not stocks, because then a brokerage house comes out and scares you, and it's dropping 10. Oh, look at the video falling here. And it's dropped. We still have a half lot as a core trade, covered call. So is a company really worth 10% less on a downgrade? Think about that. I think it's such ridiculousness.